actually now reflecting on the people that have gone on to do well or not to do so well, I think there is a common theme with them, and I think it falls under founder syndrome maybe. So, you start a business, the be all and end all, I know everything, right? I know our target customer, I know our credit appetite, I know how we're going to work. So they hire a load of good people, but then they don't devolve that responsibility or that accountability or that decision making to the experts in their field. So you almost create this kind of cottageness within a business where the founder believes it is one way. Everybody has to toe that line despite, maybe different views or different experiences. And mostly that didn't go well.
Welcome to the Property Funder podcast. I'm your host, Michael Dean. You can find me on the internet at property_funder. I'm here today with Stuart Hicks, who is the founder and managing director of City & Capital. And I'm also with Dan Greenhalgh, who is the managing director of Fintelligent. Chaps, you both work in the world of recruitment, so perhaps we'll just get a brief career trajectory. We'll start with you, Stu. How did you get into recruitment, and how did you end up running your own firm?
Yeah, so not out of university like a lot of people do. I had quite a vanilla career in mortgages before, Barclays, Northern Rock, people like that. Then came the recession. Working for Northern Rock at that point wasn't the best place to be, as you can probably imagine. Bounced about a bit when there weren't financial services jobs, but landed as a broker for a good 4 or 5 years, which is where I'd say I learned how to intermediate. And then the natural step to recruitment, I think, because ultimately I wanted to have my own business, and I thought that recruitment within an industry I understood offered quite a low barrier to entry to that. And it did. And here we are. So we started City & Capital. Not long, I suppose, 18 months working for a recruitment business to learn the trade, and then that was it. I was off. Let's go. Let's do it ourselves.
I mean, I know it's a well-trodden path, but what was the trigger to setting it up?
There's probably a few over the years, right? I probably wasn't ever the best employee. I always thought that I might be able to do it in a better way or do it in a different way, and the corporate environment wasn't right for me when I was younger. I knew that quite quickly, and then I think the other trigger was generational change, wealth, all of these other things. I think you get to that point where the salary will get you so far, the bonus will give you a nice life, it will get you the holidays that you want, but if you really want to go and leave a legacy for the family or build something to sell, which is what we're doing, then, working for others just isn't the way. So, took that step after I'd learnt the trade, I suppose.
Yeah. And how long ago did you set City & Capital up?
So it was launched in February 2017. The seeds of it started in 2016. So we've been going since then. And to this day, we don't focus on anything that isn't development, bridging, buy-to-let or commercial. And I think because of that, and for doing it so long, I did that in the previous recruitment company as well. So a decade now with the industry. From the point it grew up, I know you're similar.
Yep.
I think it's been a really good journey. And I think at that point where it was really starting to get in at that stage, the things that we've seen and the things that we've learned down along the way have been brilliant but astounding at times, I think. I'm sure we'll talk about some of those things.
It's really funny actually that I remember, I think I probably first dealt with, Frankie.
Yeah, Frankie,
and at your place, and I had no idea that when I probably first encountered Frankie, I had assumed that City & Capital had been running for years and years and years, and little did I know. Only do I know now that you were actually pretty much a startup, and you were an even younger business than we were at Avamore. So that's, I guess, it speaks to that kind of, certainly the projection, the image that you kind of portrayed. That's quite cool, actually.
Yeah, look, thank you. I appreciate that. I think we both came to the market at a similar time, really. Yeah. If you think about it, I think you were 2018, right? I think.
Well, this is actually our 10th anniversary in like 2 weeks.
Wow, fantastic. Yeah. So, look, I think Frankie's still with me. Like, she is a rock. She's absolutely brilliant. She's done every job for us. She runs a team now in the company. But I think, back then. I think it was very much me at the time with a lot of support, which is something we've worked on changing massively over the last few years. But I think At that point, I guess City and Capital was kind of an idea with some intelligence behind it, with some market knowledge. But the industry felt that way as well. And I think that that's what was exciting. And I think we've gone through a lot of the changes together. We've understood the shifting dynamics. And I think when you work then with clients and candidates, it's less of that kind of hands-off recruiter relationship and more of a, I get you. I know where you're coming from kind of a feel. And I think that's always worked quite well for us, that kind of early entry. If you think the market has really popped just before and after COVID.
Yeah, well, I guess we'll touch on that kind of you guys riding the wave of the wave of that rise in specialist finance that we've seen over the last 10, 15 years. I mean, Dan, would just speak briefly to your, how you ended up in recruitment, and particularly in the recruitment in the specialist finance sector. How did that come to pass?
So again, not a typical entry point into recruitment. I left university, joined RBS, worked in private banking, so I supported a portfolio of high net worth clients. There was lots of change, so private banking went from branch into the private banking 24, which was direct customers. Had a friend that left, joined recruitment. He kept ringing me and texting me, "You need to get into recruitment, it's great." And at the time I thought, I'm not doing that, it's dodgy. I told my mum was like, "Don't go into recruitment." And then he sent me a pay slip and I said, "When can I interview?" So I think his monthly commission was greater than an annual bonus that I got at RBS. Joined a firm, stayed with them for 12 months. First client that I picked up was Together when it was Blemain in Bracken House in Manchester. And then changed firms and went to J2, which is now Fintelligent. So that was run by two gentlemen, James and James. Spent 4 years with them. Took the opportunity in 2020 to exit. So I went with one of the founding partners of what was J2. Worked at a business called Podium. Again, servicing bridging development, commercial mortgages, some buy-to-let and second charge. Did well, grew that business, grew the headcount. And then James Fowler, who's the founder of Fintelligent, reached back out. Felt like I had kind of unfinished business there. Fintelligent, it's a business that had gone through lots of change since I left. And yeah, we've got kind of a project ahead of us now to kind of grow the business, increase the headcount, put collateral around the areas that we recruit for. The business currently has a headcount of 11. We service real estate finance. We do some ABL, not too much. Legal recruitment, which is lateral hires, partner hires in UK, Europe. This year we've placed candidates in Hong Kong, Paris, New York. So the idea is to really kind of bring good people in, build the collateral, grow the business, and similar to Stu, put us in a position where it is an exitable business, and we can we can kind of take it to the next steps, I guess.
How do you feel like the specialist finance industry has changed? Looking at it from I suppose being part of it, but not necessarily being an actual specialist finance business, but businesses that very much service the sector and are very much responsible for huge parts of the growth of the sector. What have been the big changes that you've observed over the last sort of 10, 15 years?
I think, look, the market has a good slice of kind of ex-investment bankers running businesses. It has ex-construction people. And I think all are coming in to achieve a similar thing. And I think the maturity of the companies in understanding what they're doing has grown over the course of time. And, we were only laughing and joking the other day, weren't we? If we want to look at something in a very simple way, the first time we went to an FP show or an NACFB show, we were talking to CEOs on stands, and those CEOs had a dream, they had a vision, they had things that they wanted to achieve. We rock up in June or November now, they've got great big teams, running their businesses. So I think it's the maturity of the market. I think it's understanding what the market is. I think particularly with bridging as well. Yeah. I think the market's done really well to almost rebrand that. If we think about how bridging was maybe viewed a decade ago as this kind of almost payday loan style product of the real estate world, into something now that developers rely upon or use to be able to progress projects or grow their own businesses. So I think the market's better understood how to use their products, and I think that they have therefore been able to generate products better that meet the market need. That's what I see.
Yeah, and I think some good points from Stuart and stuff that I agree with. I think what's interesting now is availability of funding as well, how that's kind of diversified from 10 years ago to now. There's lots of kind of private credit coming into the space, different wholesale finance providers and funders that are coming in and giving firms funding lines to differentiate, because it's a sector, bridging specifically, where it's difficult to kind of create a USP. So I think, newer lenders coming to market, what it means for people like me and for Stu is, we're often helping these businesses, similar like we did with Avamore. I think we made our first deal with Avamore in 2016, which will have been, potentially within the first year of trading. We've had the opportunity to help businesses scale. We've worked with entrepreneurial people and helped them bring great people in. If you look at, I don't know how many lenders there are in the market now.
Probably
over 200 maybe.
250, I reckon. I think
250. It's a competitive space, but I think what it means for people like me and Stu, is we've had the opportunity to work with businesses. Some of them work, some of them don't. Some of them are lifestyle businesses. Some of them are businesses with real people behind them that want to really grow. So it's not saying it's a copy and paste, because every business is very different. But we've been through a lot of the challenges that lenders go through. We've had experience and time spent and been able to help, I suppose, opposed to just rather placing people, offering consultancy and advice on how to really kind of take a product and a business to market and really kind of grow and scale it.
You've seen a number of market entrants, obviously ourselves, but dozens of others coming into the market over the last decade. What do you think separates those that succeed with those that sort of fly a bit too close to the sun and then fail?
It's a good question. I don't think it's necessarily the case for everyone, but I think, as with everything, at the back end of anything that you are going to sell, there is a buyer, and that buyer has a need, and it's understanding those needs of the buyer. So it kind of taps back into those lenders that I think have been the most successful, have understood their core market. They've understood their core target customer, and very often they develop products to meet the need, rather than giving this off-the-shelf kind of bridging or development approach, which, I don't know, sometimes that's relevant to the funding line that they have, right? So I think that those that have gone on to fly and to do really well and to grow, particularly in the last few years, have generally had the best understanding of their end user.
Yeah. What about you, Dan? What do you think?
I think a lot of lenders, maybe the ones that flew too close to the sun, are the ones that have maybe really kind of tried to target loan book growth too aggressively. You can see lenders that have that want to originate every deal, and often it can be either a race to the top on leverage or a race to the bottom on pricing. And I think that's a race that a lender, neither of those races you want to be in. So the lenders that we've seen that have grown, that have grown well and are still here today and doing well, are the ones that do good lending, that invest in good credit teams, that understand, good credit, good credit procedures and how to kind of really set it up, and even redemptions as well. When we first started recruiting in the bridge and development space, you'd often get BDMs and underwriters, newer roles that have come into the market and that are now in-house, that were maybe dealt with externally, with servicing, recoveries, redemptions, restructuring. I recall we had a call in 23, and I think I was walking my dog at the time, and Michael rang me and said, Dan, if I can give you any advice now, go and speak to as many portfolio managers as you can. And I think it was probably 2-3 months later, I think the mandate that we had on with every lender that we work with was, do you have any good portfolio people? Do you know anyone that could do collections? And it just goes to show you I think it's great to get money out of the door, but more importantly, bringing money back in and doing good loans. So for me, the businesses that have done it right, the ones that have grown the loan book but done it properly rather than just being super aggressive.
Yeah, I mean, I think it's quite interesting observations. I mean, you talk about people, knowing their end consumer. I can tell you that when we started in 2015, I don't think we had a very clear idea in our minds as to what our end consumer was, if truth be told. So we probably, I think, shall we say, the market found us rather than our market found us rather than we found our market. Mm-hmm. But I think in a lot of ways, like all three of us are like we're products of timing, if nothing else.
Yeah.
That we kind of got into the industry, I think, just as it was sort of starting to go up the hockey stick, and there's a sort of slightly Goldilocks component to when we got into it. Were there any individuals that when you met them for the first time, when they started the businesses, you felt like either these guys are going to make it, or these guys have got no chance? And how often were you proved right, and how often were you pleasantly surprised?
Look, I think that's a really good point, because I think actually now reflecting on the people that have gone on to do well or not to do so well, I think there is a common theme with them, and I think it falls under founder syndrome maybe. Mm-hmm. So, you start a business, the be all and end all, I know everything, right? I know our target customer, I know our credit appetite, I know how we're going to work. So they hire a load of good people, but then they don't devolve that responsibility or that accountability or that decision making to the experts in their field. So you almost create this kind of cottageness within a business where the founder believes it is one way. Everybody has to toe that line despite, maybe different views or different experiences. And mostly that didn't go well in my experience. And then you'll tend to find, I think, that those that went to market brought in good people because they wanted to listen to counterpoints, they wanted to be challenged, they wanted to utilize that expertise. They all seem to have flown and done really, really well. So I think as a maybe, like a common thing, I would say that is something that seems obvious to me now in the market. The ones that embraced expertise seem to be doing really well. The ones that didn't, well, they ain't here anymore. Yeah.
Do you think though that embracing of expertise is some of that? Is that some of that? You have to kiss a lot of frogs though to find the right people, because like the talent pool is shallow, mm-hmm. and lots of people, and we've seen it. We've had, we've brought people in at relatively senior levels, and we've seen it that someone can have a good name, but they might just have very, very good press, or just their perception of them is really good, but actually and not really referring to anyone in particular, but but there's always that risk that people have these lofty reputations, but actually don't necessarily deliver. So, and that's one thing I find difficult to reconcile, is that some of these guys these businesses have to kiss a lot of frogs to finally settle on a sort of management team that actually can take them forwards.
Yeah, I think so. Sometimes I think that's the natural progression of most businesses, isn't it? I think if you're trying to bring people in, they might understand credit, and they might understand how to originate, or whatever it is, the role that they're doing. But, often you have to learn how to do that within the environment and with the other people that you're working. So the culture piece is important, because if you think again back to, even before 2014, if we go back to the recession, we saw all of the bankers, or a lot of the bankers, coming into this sector. And nowadays, how many clients would you speak to and say, will you take someone from a tier one bank? Mm-hmm. And they'll say, absolutely not. They're institutionalized, they don't know a thing about specialist lending, etc. And look, that's fine, but over the years these bankers have experienced specialist lending, and they have understood how we operate and how that is different to banking. And I think even those in iteration 1 or iteration 2 that may have got their hires wrong, if they are still those principled CEOs or managers that say, look, I need the expertise around me, eventually they'll get it right. Yeah. And I think what's kind of grown over time is this pool of people within specialists that may have come from banking that are no longer institutionalized, because they've probably got a couple of scars and learnt along the way, and maybe fit in better with the culture of our market now.
Do you feel like the talent pool that's been developed within specialist finance has got deeper? Has it got better?
No, well, I think it is now. I think it is now, right? So BDMs, let's take BDMs for example. So Dan and I rock up to our desks in 2014. We've got a remit from, another lender saying, go and get us a BDM. We need a great originator. We'll pay what it takes, is usually what it says. And then they'll give you a budget of 40K. Nowadays, if you're a good BDM, you're going to be commanding 80, 90, 100, 110, 120 on your salary. But I think in those early days of this market, it was hiring for opportunity, but based on risk. And this view that if we just continue to get the dyed-in-the-wool guys that have done this, they know bridging, give them an extra 5K, These are the guys that cycled round the market about 10 years ago. It was almost like, well, if they know what they're doing, we don't need to train them. We're a small business. We don't have the time and energy to do that. And so what I felt for years and years in the specialist market was it really needed to open its mind to bringing in strong salespeople from other industries and training them on the products. I don't think it's difficult. I don't think engagement with brokers has to be difficult if you're a good door opener. But I think very, very early on, a lot of the hiring, and you're right, it was sales, underwrite, portfolio management. Nothing else existed in the world. And even portfolio managers didn't matter at the start. No. We'll worry about getting the money back later kind of approach. But that kind of sales and underwriting, there was nobody taking a punt on, well, they understand the principles of risk because they've done it in asset-based lending or they've done it in insurance. It was always get me the bridging underwrite, get me the bridging BDM. And I think because of that, over the course of time, it became a bit of a cottage industry for a period where you could not get into it if you hadn't already experienced it. That's what I think has changed a lot recently, if I'm honest, Dan. I don't know if you want to shout me down on that or if you think different.
No, I agree. And I think the hiring decisions were probably, were made because, you had two lenders that had two products that were very similar, that may have had the same funding line. This BDM's getting work from this broker. We're not getting it. If we hire him, he'll just bring that work with him. And I think that was kind of the assumption. The question that we always used to get asked, and I think we still get asked it now, what's his black book? Who does he work with? So there is kind of an expectation that it's making an acquisition rather than just hiring somebody.
I think what's maybe changed that a little bit is marketing. The growth of marketing in the recent times. Do we need the BDM to get to the broker? Not necessarily. Yeah. I'm sure Davina will love that. But then also, I think, along with that as well, in a period where a lot of lenders were staring down the face of a non-utilisation fee on their funding, better bring in the person that knows bridging and the bridging broker than take the punt on the one that does not and suffer that fine. So, I don't know, again, as the market's matured, I think it's allowed companies and it's allowed firms to consider skill sets rather than product experience or broker relationships.
Yeah, I agree.
I don't know. I think it's interesting what you say. Using the relationship manager BDM example, I think if I think about what I'm looking for, or we as a business are looking for, we want some relevant experience. But the most important thing above all is, are you a nice person? And are you going to work hard? Because everything else, we're not rocket scientists. Yeah. It's not the most challenging. These are not the most challenging things in the world to learn or explain. So the most important thing is attitude and good personality.
I think there's a proof of concept for your business, and when you're comfortable with your business and that your business will do well, I think the personality becomes more important in the individual. I totally understand that. So if I look at City and Capital, and I'm sure we'll come on to talk about that a little bit later, I don't hire recruiters. I just do not hire recruiters into my business. I train the skill and I bring in the personality, exactly what you're saying. The first hire I made was a recruiter. And why was that? Because I was in debt. I just started my business. I wanted quick results. I wanted guaranteed income without time to train, without the true time to develop. So almost a defensive hire to get me going, and maybe one or two defensive hires over time, and then things get settled. I have a better understanding of what my business is and what it takes to be successful. And now all I care about is personality in my business, because I know it's an old adage of Branson years ago, talking about if you take care of your staff, they take care of your customers. I do believe that, and I think the right personality is very difficult to come by, but being able to train, this is how you recruit and this is how you do it in the right way, piece of cake.
Well, do you think that there's a sort of similarities between our sales funnel and your sales funnel in terms of approach, Dan? Do you think there's effectively how you go about, because you build relationships, the opportunity comes along, and then you execute on it. But what would be your sort of your read of that?
Yeah, I think there is. I think that the similarities are definitely there. We could easily call our recruiters relationship managers. They all have their own, client relationships, which would be very similar to that of a broker relationship. It's about creating trust. We don't have a product to sell per se. We have access to candidates that might be of interest to a client. similar to, I suppose, a lender. You know, you have a product, but it is, I suppose, I think Jacob said it on interview on here. It's, you know, in the game of selling cash, which is what everybody's doing. You can productize it as best to your ability, but you know, everyone has the same opportunity. So I think there's a lot of similarities. I think the relationships are important. I think you need people that have real people skills, somebody who can take kind of ownership and follow up. You know, working in, it's very easy. Me and Stu talk not as often as we used to, but quite often. But we share a lot of the same kind of values when it comes to recruitment and doing things the right way. And I think it is as simple as doing that. You know, it's you know, working with transparency, kind of, you know, following through on what you say you're going to do when you say you're going to do it. But it is an experience as well. You know, we understand the pressure that from a business when looking to hire how important it is to get the right person. But on the other side of the fence, moving somebody jobs, you know, it's probably up there one of the most stressful things you can do, you know, besides moving house. I've just done both in the last 12 months. So, yeah.
Absolute glutton, that.
So, you know, you've got to have empathy, you know, you've got to be supportive, but there is an excitement. You know, a lot of the projects that we work on, I'm genuinely excited to work, and then we can see, you know, it's not a transaction where it's one and done. You can see that person in the business. They might be a hiring manager even now or later down the line. So I think it's about, you know, yes, I can see the similarities. It's relationship management. It's building partnerships. But yeah, the two are very similar, and I think that's probably why, you know, when we speak to businesses about finding the right originator or the right business development manager or relationship manager, however you want to badge it up. You know, it's understanding how critical that hire is, because, you know, most people in a lender are revenue generating, even the underwriters nowadays. You know, it's about doing deals, not trying to find ways not to do them. So I think that's very similar to a recruitment business as well.
You both talked about some component of funding. You talked about non-utilisation fees. You talked about funding lines. Dan, how did you come to learn and understand that? Because I can imagine there's a lot of your peers who don't know the first thing about funding lines. Is that something you've found that you've had to develop a knowledge of as a necessity, or is it or is it something that you just have a natural curiosity for, and it's just something you've built up and developed?
Without giving too much away, and I don't think we are. So funding's probably you know, it's one of the biggest selling points for a business that we work with. So it's often, for me, in the top 3 questions we'll ask: who are you funded by, and what does it look like? What's the deployment strategy?
But has that always been the case?
More so in the last 5 years, I would say.
Post-COVID, basically.
Post-COVID, yeah. You know, I know a lot about funding. I mean, I've mentioned to yourself before as well. You know, I'm not a capital raiser, but I have relationships with funders, and I've got meetings taking place, you know, at the moment with lenders speaking to funders that I know. So it's, you know, it's not just, again, we talk about the services that we offer or the support we can offer. Yes, we can bring you people, we can help you with marketing, but we can also put, you know, lenders in rooms with funders as well. So it's about kind of creating value wherever we can. So I think funding is something we've always been aware of. In the last 5 years, it's become more and more important. And I was speaking to Stu outside as well. It's interesting to see lots of new funders coming to market, private credit. There's PE guys that are, you know, getting their hands dirty now with bridging finance. We're seeing lots of development lenders that might have principal funds that are looking to do bridge lending. It's bridging, but they try and make it sound as structured as possible. So, you know, there are differentiators. There's lots of new money. So I think it's important that as a recruiter, you know, if we're going to be representing candidates and, you know, representing candidates and talking through the benefits of joining a firm, I think funding is one of the things that we should know quite a bit about. Yeah.
You talked about the two of you speaking a lot. Obviously, privately, I know that you kind of both speak quite frequently, but considering you're both competitors, what would you say the benefits are of having a dialogue with kind of people that do your job but are trying to, you know, nick your lunch at the same time?
Look, get your hands out of my lunchbox, you. And I don't speak to other recruiters particularly. It's not like, you know, we're all interconnected in the market. We're not. We do compete. And I think, you know, a number of years ago, particularly when I was more day-to-day on the tools than I am now necessarily, we've got shared clients, right? Mm-hmm. We've got shared candidates. We've got shared ethics. Mm-hmm. We believe things should be done a certain way. We all know the ones that don't do it that way. Mm-hmm. We're the ones that get the phone calls from those candidates frustrated and we help them out. So quite often, we've talked about some real emotional stories of candidates, haven't we? We've talked about shared opportunities. We've worked on stuff together. But I can only do that because I know that I think ethically Dan looks at things the right way. I think first and foremost, and don't get me wrong, Michael, as a client of both of ours, we love you. You pay our invoices, but frankly, the candidates matter, right? They're the people who need protecting, they need opportunity. They're the consumers, in FCA world. If we were a regulated entity in recruitment, which I think wouldn't be the worst thing in the world.
Heaven forbid, there wouldn't be many recruiters left, would there?
I don't think that would be the worst. Anyway, we'll come on to that, I'm sure, later on. But my point being is that I think we just gelled, didn't we? We just gelled on how we felt things should be done, shared connections, shared relationships. And at times you just want to speak to somebody that's doing your job and either scream down a phone and say, am I going mad? Or, point me in the right direction, Dan. Am I doing the right thing? And that's kind of where we've been been together probably since 2018 maybe. We've bounced things, haven't we? And
we've often spoke about opportunities. You see lenders that do stuff on a mezzanine basis. Could there be opportunity if there was a bigger project? I think we had one bite that didn't work. But Stu's right. I like Stu. I like the way he works. It's we do compete, but there's so much work out there. So we're not kind of bumping heads or locking horns, are we?
No, I have this conversation a lot with my team. Sometimes like, should we expand into asset and invoice finance? And believe me, I've done it before. The answer's no, because what percentage share do you think we take of bridging, development, commercial, and all that around that, the actual money that gets spent on recruitment a year? It's nothing, is it? So I think there's a lot more work for us as recruiters to do in this industry. But I think going back to what you were saying earlier on about funding as well, when you're recruiting, particularly at the senior level, sometimes you do find yourself coming into contact with things that you weren't looking for. I've been part of the sale of loan books and introducing people to funding lines that have then gone on to fund that business. So, you kind of get immersed in the industry rather than recruitment. What I love is the industry, and I like recruitment. Recruitment is what I do now, but my love is the industry. So you tend to find that if you love something, you want to know it backwards. And then when you know something backwards, you just tend to have a bigger impact for everyone.
Yeah, all you're doing is you're making yourself a more rounded part of the jigsaw, right? So you can just have more impact for the clients. And I think there's some really good advice there, some really good suggestions, because I think the good lessons there, which is that the more complete you are, like the better you are at the role. How does that strategic component to what that's providing, I suppose, that strategic advice, mentorship to founders like myself, where can that take you? How do you as businesses grow though? Like you say you don't want to do asset-based lending, for example. I know you do a bit of that, but you feel like where do you go next? How do you grow if you're not going into those additional pockets? What's this opportunity for you?
Yeah, I think there's so much that's counterintuitive in some way. So we talked earlier on, what did I think I would be doing when I came into headhunting in this market? I thought I'd be headhunting for banks, right? That's what I thought I'd be doing. And what I found the joy was that kind of SME owner-managed business where you're dealing with that person at the top level. And the more you speak to those types of people, the more you kind of get to being able to have a peer-level conversation. Never quite peer, but you're in that position. And of course, they want you to go out and get really senior people. They've got to have confidence in your knowledge of the market, your knowledge of the client, not just in terms of interview 1, interview 2, offer, and away we go, but your broader understanding of how the market operates and dynamically how that impacts individuals becomes really important. So then I thought it was quite interesting listening to Marcus Nansen as well. I thought he spoke really, really well about his experiences, and he was a one-man band. And I think in that situation, it's fine. But if you're going to grow a team, well, they want educating. They want kind of upskilling in these areas. They want to talk on your level with clients and candidates as well. So you almost end up with a duty of care to really understand all elements of what you do and the market in which you operate in order to, give them the strength or the capacity to do the job in the way that you do. So Look, I just love it. I absolutely love learning about it. I love the nuances. I love what's new, and I love what gets kind of pushed to one side when it's not right. But knowledge is power, and that's kind of always been my mantra in a way.
This podcast is sponsored by Avamore Capital. Avamore Capital is a development and bridging lender based in London, but lending all over England and Wales, lending on projects from £250,000 all the way up to £25 million on bridging, development, refurb and part complete developments. Please visit www.avamorecapital.com to find out more. And obviously you talked about 250, 200 plus lenders in the specialist market. You probably would disagree with this from a selfish point of view, but like objectively, do you think that there are too many lenders now? Is the market too fragmented?
Well, I think the problem is if people are just pumping out the same old products. I think sometimes, is it a vanity play? I want to run a lender. So if you're not going to come with something that's a differential, you don't have USPs, then it must be really stressful competing for the same loans over and over again. And I do wonder why people would want to do it. I guess being in intermediation as a career, if I was to do anything, I'd rather be a broker than a lender if I was to go back into doing what I was doing. But I think it takes a brave person now to come into a market that is as mature as it is. And with funding that's maybe light years behind others, I think it must be harder than ever to be a startup in this space right now. I wish them all the best, but it must be difficult.
Yeah, I mean, if I was to compare that to like when we got started, as I said, it was quite Goldilocks, but we didn't have very cheap cost of capital, but we had low overheads. We had a bit of our own capital as well, family capital, to kind of get us going and start to build a track record and build relationships and stuff like that. But but you can do that when the market's happy to accept 10, 11, 12%.
Yep.
3 years later, when the market pricing is like 6% or 7%, you can't offer those family office investors or private investors that were investing alongside us the returns that they would want or find attractive to want to do those deals. So it would have shut them out of the market. Probably come back to those types of investors more latterly with the higher interest rate environment that we're in. But still, you have the depth of capital. You look at some of our peers offering, they're offering loans at our cost of capital in certain spaces. Very vanilla niche bridging. I mean, you talk about development lenders wanting to go into bridging. I think one of the main reasons why they're doing that is that their capital that sits behind them is going, enough development for you, thank you very much. I'd like some more. I'd like some more bridging. And we go, the problem is like, okay, we'll get to the back of a very, very long queue because there's a risk appetite that's so narrow but very deep, and there's way more money chasing a very, very small amount of cash that sits there for that. But I just can't help but think. I can't help but think that there's, and I've said it many times, I'll continue to say it, there's got to be some wave of consolidations that's got to be around the corner. There's got to be a lot of lenders where there's going to be, soon enough, there's going to be lenders where the founder is going, right, I'm kind of done. I've made enough money, or I want to move, I want to exit. And there's also just going to be businesses where there's synergies. You talk about there's capital, there's funders or capital that wants to come into the market, private equity and all the rest of it. To my mind, I've said it before, I'll say it again, I think that it will go the way of accountancy, the way of surveying, the way of even the traditional banking sector. Mm-hmm. You're going to have a first division of 4 or 5, or sorry, Premier League of 4 or 5, and then you're going to have a championship of 10 or 12, and that's it. And then everyone else, you'll have some mom and pop shops that are lending out 5-10 million a year, but I don't think that's. I think you're either going to be $1 billion or you're going to be 10 million. That's it. I mean, where do you guys stand on that? Yeah, and especially on the basis that you're probably talking to some of those people who might be having those thoughts. Yeah,
I listened to your opinion on that with I think it was Greg and Jacob.
Yeah,
I agree. I think it's prime now for somebody to come in and start buying up, which is great for people who own lenders, especially if you're a small lender, because I don't think an exit is always the easiest thing. I can see it happening. It's just a matter of time for me, and I don't know what that means for us, what that looks like. With acquisition, that will bring new staff into the business, whether there's opportunities to then recruit for bigger businesses. When we talk about kind of growth and what it looks like for Fintelligent, we work with kind of 3 types of firms. One being a newer area, so we do specialist banks, non-bank lenders, and we now work with investment managers. So that's working kind of special sits, all real estate focused stuff, which has seen us do more work in more work geographically, really. So that's where we're starting to expand and see further opportunities. There probably are too many lenders, and I don't. There's more and more every year. I think there's opportunities for them if they don't have ambitions to grow. They want to keep a lean team and be able to lend, but I don't think it's the easiest place to be. So yeah, I agree with your opinion. I listened to the podcast and. With my wife in the car who's probably not listening to it, and was like, "Do you hear what Michael was saying then?" And she was like, "Yeah," which I think so yeah, I agree with that. I think it's just a matter of time, really.
What about you, Stu? I know you do some strategic advice for some firms around M&A and things like that. What's the chatter? What do you hear from those firms and maybe those people wanting to get into the space?
Yeah, so I think it's interesting. I think consolidation will happen, but I think we've been talking about it for a long time.
It feels like we've been talking about it forever, right?
There have been so many triggers that you would expect. COVID, wars in Russia, Liz Truss, or name them, right? Base rates, all these opportunities. What I think we're actually seeing a little bit more of, or probably seeing a little bit more of at the moment, is as lenders are getting larger, wanting to be Shawbrook, right? And funding down to these businesses. So rather than consolidating, funding them. Yeah. So growing these and maybe asking them to take a bit of risk at the front end. So maybe that will continue. But I actually have another business, I don't know if you know, I've got a business called Mello. Mello operates purely within financial services, so financial advisory. And they are specifically in M&A. So that is a market that is consolidating at a great rate. And I think the key drivers behind that are the increased qualifications that you need to advise. The rising cost of PI insurance in that market is obscene. And actually the cost of tech and the fact that it's gobbling up things like paraplanner jobs and everything else. So there's a kind of an aging market there, or a market of people that don't necessarily want to move into this new wave. And we are seeing an awful lot of consolidation in that market. I just wonder if this market is too young. That's what I think it is. I think at the moment, if you were, a young business owner, would you choose an exit over an opportunity to run again with a funding line over a couple of years? I think they're going to go with the first one. And I think the opportunity's there for new funders coming in, as Dan says, and equally these businesses and banks and challengers that see the returns, and also the fact that through another lender, they don't have to absorb as much of the cost and risk necessarily if they're able to play ball. So I think there will be consolidation. I think there should be consolidation. I just don't think it'll happen yet.
That's a really interesting point, actually. That's a really interesting insight, because I suppose there's some truth to it. I mean, in the early days of the podcast, I interviewed a lot of other lenders, and we talked about them exiting and whatnot. And actually, even some brokers as well, and a lot of the brokers, especially the ones which are kind of 30s and 40s age, less of the ones in the 50s, the ones in the 50s, and obviously we have the likes of Phil Gray, for example, who did recently sell or have a bit of M&A activity, and I think predominantly the feedback was, no, forget it. Like I'm too busy enjoying myself, trying to grow and whatnot. So that's actually interesting. That's an interesting insight, which is actually. But does that not create? So I sort of understand the logic there, which is I'm in that growth phase of my career. I'm not. So why would I want to sell? But I suppose to that point though, does that not create opportunities for acquisition and consolidation, where that younger, hungrier founder goes and spots other businesses in the sector and goes, smaller competitors or larger competitors and goes, yeah, I fancy a bit of that. Do you know what? If I could combine that product, or they're really good at this and I'm really good at that, and 2 + 2 = 5 or whatever, there's got to be some element of that coming up as well, isn't it?
Yeah, look, I think so. So, again, going back to Mello, which is my other business, that was formed through a merger.
Right.
So I had a business called the Exit Partnership, was, in plain, simple terms, a M&A broker. And we merged in a brilliant business called Change Squared. And they are a coaching and growth consultancy for IFA owners. So suddenly now we're coaching IFA owners to sell their businesses. And then we are selling their businesses, right? And that's like a life cycle thing. I think what you're talking about there is more merging. So, for example, potentially bringing together two parties that can impact the market separately, but to do it together. Yes, that can make sense. I think ultimately, though, consolidation starts and ends with people being willing to sell. Recruitment starts and ends with a candidate being willing to join. And until the owners in this market say, look, I want my exit, I want my out, I want my money, which we're not seeing. Maybe the checks aren't big enough at the moment, and that's what it might be. Then why would they do it? It's a buoyant market. It's an enjoyable market. And I think it's one where, if they've got the expertise and they're not 67, then why chuck in the towel? But I think it'll come. And I think on top of that as well, I think when we look at a lot of the people that have exited this industry that were business owners, so people that have started and kicked off lenders that are now much bigger, a lot of the exits we've actually seen are because certain firms have maybe gone to IPO and the individuals have exited with their money. Or they've sat in a challenger bank and had their 3 to 5 year shares, taken their money and gone. Whereas these kind of owners of lenders right now, I think unless they're in real difficulties, they see opportunity, not threat. I think that's what we're seeing.
What from where you sit, what do they see the opportunity as? What are they telling you that their opportunities that they're going after?
I think opportunities within lending. Look, real estate is an investment at the end of the day, right? As is stocks, as is shares. So I think as long as you're operating in a market where you are selling a product to allow another individual to make more money, it's not going to be an industry that goes in the bin very, very quickly. I think there's a relative amount of safety in knowing that if you're working with products that make other people money, then that is a market that is well worth being in.
Just touching on technology, what impact do you see technology having on your lender clients, Dan? Like, is that driving recruitment and hiring decisions?
Not just yet, I'll be honest, but I think there's definitely a gap and an opportunity for technology. It's not, we can still go into lenders' offices now that have got total lend of £1 billion that we have to see a CRM and it's on an Excel sheet. So there's not many other sectors, I don't imagine, that are so behind when it comes to technology. It's an area that we've looked at with Infintelligence. We've just integrated a BI system. We have a CRM. We have AI and automation. And it is, again, for the value add to allow us to be quicker, to provide better service to clients. But ultimately, as we look to kind of scale and grow the business to make us more attractive. So I think there are opportunities. I don't think it'll be too long until we start to see an effect on recruitment, whether that means less administrative staff, more revenue generating people. I think it could potentially go that way. But I would say for the most part, the industry is pretty behind when it comes to technology and still pretty manual.
So you think everyone's still operating in Word and Excel? And
I can guarantee that. Yeah. Guarantee that. Yeah, I've seen it.
Yeah, I mean, I won't bore people with what we've been doing, but it's certainly quite interesting, probably quite refreshing. Do you think there's the people who are more tech facing, who are embracing the tech, have an opportunity to steal a bit of a march, or do you think actually it's so relationship driven as an industry that actually it's still a bit premature for those who are a bit more tech savvy to steal a march on the rest of the industry?
Do you know, I think trust is a key word here, right? I think we're in a phase, particularly with things like AI, where people are learning to trust it. trust that it can do what my underwriter does, trust that it can have the same impact around relationships or marketing. So I think we're in a safe period at the moment, and I think if you're an employee, doing an admin-based role, I think you're okay. But I do think the future is reasonably ominous for certain roles because just the pure cost of some teams or keeping certain resources within your business. If we do ever hit a point where the economy gets particularly tight again, we know the types of people that were made redundant over COVID, and we know the environments that they came out of, and I think for now it's all good. But as we all start to gain more trust, or less trust if you're particularly dystopian, with things like AI, I think we'll learn. I think we'll find out.
Yeah, I think, just my 2 cents worth, I think ultimately we are going to see a reduction in the number of underwriters, the number of admin people. I guess that middle office component of it, and I think the client facing roles will, whether at the front and the back end, will probably stay the same or grow, depending. But I do think that it's that middle office that's going to become, which is in a lot of ways, if you think about what's the most expensive hire that you'll typically do, it's an underwriter, right?
Yeah.
You probably won't need as many underwriters for the amount of origination volumes that people are doing going forwards. If you can automate, or you can have a machine do a lot of that work for you, right? So
yeah, I mean, even in seating capital, we use AI as well. We use a lot of AI. We use a lot of kind of modern tools, but that isn't to replace the person. It's to make the person's job easier or more efficient, and to allow them to do more work. And I think it's also going to depend on the type of people that you are. I wouldn't want less people in my business, like the culture, the environment, the friendships, and everything else. And in particular, they are, as you say, you had an engagement with Frankie, that was a positive engagement. AI is not going to give you that same thing. So I'm not a fan. I like how it can make my business more efficient. Do I want it running my business? Not at all.
Yeah, I guess that if we think about in the world of recruitment, right, you're talking about the investment that you've made in tech, Dan. Fundamentally, it's a person to person. You talked about, Stu, a consumer, right? The candidates are the consumer.
Yep.
Maybe culturally there will be a shift at some point where, our kids' generations maybe would prefer dealing with a computer or an interface rather than a person picking up the phone to them. But right now, I mean, it's nice to know that I can pick up the phone to either of you and go, right, I have a need, can you please fulfill it for me? I wouldn't have the same confidence or faith doing that through an AI interface. And on the candidate level, you got to imagine that it's going to be a lot nicer getting a phone call from a person, or an email, maybe less so an email, but certainly a phone call from a person going, look, are you looking for so and so, rather than getting a cold outreach from a recruitment bot, right? Yeah,
and it's interesting, talking to the team last week, often when we present an opportunity to somebody, we'll spend 5% of the time talking about the responsibilities of that role, and 95% of the time talking about the business's journey, who the people are, where they're going, what the funding is. So, a lot of the conversations we have are very much about the business's journey. And I think that's because we work with businesses which are founder run. So you get, when we speak to yourself, it's an excitement around what you're building, opposed to just speaking to an employee, hiring manager from a big bank that's a bit faceless. So I think that kind of interaction is important. I think you're right, younger generations. I've got a daughter that like, if I ring her, she's like, "Why are you calling me?" And I'm like, "What do you mean?" Like, but it's all it's all text, yeah. So I do think in time, that there is going to be a change. I don't know how that fared for like the mortgage world. I know that you can do kind of mortgage applications now, which are pretty much fully online. But I'm pretty old school. I'll pick up the phone over text or email any day. So,
but let's look at this, right? So you're a candidate, right? And you're either going to change jobs because you haven't got one, because you're unhappy in the one that you're in, or you're ambitious and you want to push on, and your employer ain't giving you what you want, kind of thing, right? So you're going to meet these people at different stages of their lives or different circumstances that they're in. But the one thing that will always be consistent, is this is actually a personal decision for them. Whatever they decide to do in their career is to benefit their personal lives. You know, a client is massively looking to benefit their business. And so they're not necessarily opposing views, but the candidate starting point is often very, very different. Empathy was a word that you used earlier on. I don't want to chuck Maslow's hierarchy of needs all over the place because it's been done to death. But, you know, funding lines being strong at Avamore for a candidate is all about the candidate's security. You know, Michael Dean and the team wanting to expand out and to do X, Y, and Z is all about the opportunity. And very often you have to create that story between the security and the opportunity. And I just don't see AI doing that.
No.
I think, you know...
Well, good kind of example there. When was the last time you placed somebody that was looking for a job, as in like, I need a new job?
COVID.
Yeah, so, you know, often we place people that are happy in the jobs, but I'll hear you out. And it's the opportunity then for us to persuade, to talk about a story, to get them excited. And really, the role of a recruitment consultant is a good storyteller. You know, the sales is part of it, but relationship management comes in later, you know, because you have to then kind of guide them through whatever, you know, the kind of the process. But initially, it's telling the story. And I think asking the right questions when meeting a business, going out to the office, meeting the hiring managers, you know, feeling and touching, that's really the art to it, really.
Right, I want to go in a slightly different route now in my next question, which is the Employment Rights Bill. I feel like we're not talking about it enough, and it's going to be really seismic change to the rules around employment, and I think that it's going to have a big impact on. I think people will be very slow to wake up to when they do. It's going to change hiring behaviour. What sort of conversations, do you have any thoughts, and also what sort of conversations are you having with people on this?
So it's a big talking point in our office. So we've got a sister business which is called Leaders in Care. It's a healthcare recruitment business. So they service private hospitals, nursing homes, an array of different types of businesses. And on our side of the business within Fintelligent, within the UK, the work that we do, I think it will make hiring decisions be more considered. You know, there's a greater responsibility from day one from business owners. I don't think there's businesses that often say we'll hire them in to see how they get on and then we'll just let them go, because nobody really wants to do that. But also, you know, that I think it will come into question. You know, when hiring somebody, how much do we need this person? Can we service this work internally? Can we retrain somebody? Because there's greater responsibility and ultimately cost that will be attached to bringing new people in. So. Yeah, and people aren't talking about it. You know, it's pretty much around the corner now. What is it? 8 months, 7 months?
It's not far away.
Something like that. So it'd be interesting to see how it changes the kind of the dynamics of recruitment.
Any of your clients talking about it, Stu?
No, not greatly. I think most tend to wake up to these things when it's a reality. And I think when we deal with politics, we know that things can change before that even gets over the starting line. It may not, but I think, you know, taking my headhunter hat off and being an SME business owner at the moment, it feels like we've had a few kickings recently, I guess, around, you know, the increase in corp tax and now being asked to take on more responsibility. And I think it is right for the employee. Of course it is, you know, better rights for them from day one. It's very difficult to argue without sounding like a right-wing nutter. But I think at the same time, you know, what is it? There's a percentage of businesses that may be near 80-90, which only have 5 staff in the UK, and you know they're not money bags and they're not, you know, big banks that can absorb these types of things. But what worries me a little bit is it does tend to run parallel with this culture now of sue your employer. I think for a good 10-15 years of these adverts on Channel 5, you know, where there's blame, there's a claim. You know, we're in almost a world of liability now, and I do worry a little bit that we aren't finding the middle ground with this, and that maybe we're going from one extreme to the other, and the actual answer exists somewhere, perhaps in the middle.
In the middle, yeah. Well, speaking of dramatic situations,
you're not going to talk about Arsenal last night, are you? Because I'm walking out. If that's the case.
No. We're not going to talk football, but I'm very happy to. If you want.
No. Carry on.
I'm okay as well.
Are you Man United?
Yeah, I'm
okay.
need
to shush.
Yeah. What was the one hire or one candidate or one placement that you both had the most, should we say, was the most colourful? That's probably rather than saying the biggest nightmare. What was the most dramatic placement that you both kind of been involved in?
Oh, wow, dramatic. It's a good one. Over to you, Dan. Go on.
I know
Cheers
personally you had a company pull on a very senior director.
That's the one I'm going to say. Yeah, obviously not naming any names.
Can't do that,
of course. But yeah, so as recruiters, we're paid on completion often. As a business, we try to bring in different products or services to avoid that or to kind of bridge the gap. So so we do some retained work, we do some executive search. We've just agreed on quite a significant project for a specialist lender that are looking to hire 10 originators, and we've been able to kind of engineer that so it's paid in a different way. A lot of these products and services and kind of arrangements come from experience. So to touch on probably the most stressful one, and came at a point where I was quite experienced anyway. I think I had 9 years under my belt at that point, so I was able to kind of navigate it. We had a COO that was offered, that was an equity partner in his previous firm, hand over his shares, was on a 6-month notice. I think he'd worked for free, had garden leave for free, and then we had a phone call 5 months into the 6-month notice that they were pulling the offer. So we had a very senior candidate and somebody who I knew personally as well, so I was very close to him and still am today. Had to break the news to him, and you can imagine how that went. And advise the client. We had to work with the client still that they should probably pick up the phone rather than going through me. There's certain times where you should probably do that. They did that. It all got worked out in the end. The person didn't start. They found a new job. But that was the one where, resilience is important in recruitment because it is a roller coaster. The ups are great. The downs are difficult. But you have to learn to kind of, I think the thing that we look for most, and we've just had an interview recently for a consultant that's joining our business. She accepted this morning. So, but the things that we look for most is goal orientation and resilience. Those are the two characteristics that we look for in people that we hire. And that was the one where I took the call in the office and I had to kind of just put the phone down and sit there for a minute. And I didn't come out for about an hour. So you could see like the guys in the office like looking through the window, and I was kind of just like rubbing my forehead. That was a really tough one. That took about a week to kind of bounce back from that. We got to think about the management afterwards, which was difficult. And the percentages that recruitment agencies and headhunters work at, it was a pretty significant bit of change as well.
Big wad of cash that you had to sort of rediscover somewhere else. Yeah.
And 6 months work and then not getting paid because there was touch points on a weekly, monthly basis, finding that person, getting him through his exit meetings in his current firm. So it's a full body of work to be left empty-handed, and also felt some responsibility for it not going ahead as well, because he was quite happy in his current firm and I'd engineered it. So that's a tough one.
So Stu,
top that, Stu.
Can you top that?
I don't know. I mean, I feel your pain there, mate. I mean, honestly, I know that that's not just the 6 months that you've managed him, or the 5 months that you've managed through the period afterwards, but the months of working on it before. That's the best part of 9 months' work, isn't it?
Easy, yeah. And there's also the time beforehand as well, because sometimes you will court somebody quite senior for years, checking in with them, how's things going, how's the market. So and it puts certain relationships at risk when that happens. But a long time. Yeah.
I mean, mine aren't really that dissimilar. Mine, in particular, there was one day in 2020. 2019 was booming, wasn't it, prior to COVID? It was just a really busy
days,
year. Oh, bring it back. And it was one afternoon. I remember it being dark outside because I was in one of our training rooms, and I got a call, and my sales director was gone. So that was 40 grand that wasn't going ahead. And of course, it's COVID. You don't really have any argument to this. They don't know the way forward. Nobody knows the way forward. And my other big placement from December, which was the other 40k, that call came 15 minutes later. Completely different firms. Wouldn't have known the other from Adam that they were doing this business.
Yeah.
And a bit like you, I just sat in that room. You know, the lights were off. I was sat in that room. And actually, my wife is my business partner. She runs the M&A. And she came in, she said, "Why are you sitting in the dark?" And I think I just said, "Can we go home?" But the thing is, right?
Yeah.
You bounce back, you go and do things again. It's a kick. But Dan, I think one thing that you and I agree on in particular is recruitment is actually about the long game. Because the most often when I've been kicked by a situation, it's paid me back down the line, some way or somehow, through those candidates in particular, where they ended up next.
Yeah, it's true.
A similar one where I had a lady, at the time, what I believe was probably one of the best sales directors in this market, still probably one of the best at what she does now. You know, managed to get her a great job at a challenger bank. Her ex-CEO is moving to the same firm, convinces her to go. I get that call after 9 months saying I'm not doing it the day before she was due to start. And I've done so much business with her since. So look, it all works itself out. I just think you just can't get caught in that moment, because otherwise it's a really horrible place to be.
Well, on that bombshell, I think we're probably close to wrapping up. But I guess if you were to give either yourself or someone else some advice to get into the specialist finance industry, or to get on in the specialist finance industry, what would be the bit of advice that you'd give?
It's interesting. I think the kind of landscape's changed quite a bit. I'd probably say there's more graduates in this space now, more than ever. And often when we speak to graduates getting into the sector, it's talking about opportunities, not just to work within direct lending or work in real estate finance, but I think a lot of specialist lenders, what you do get is access to CEOs. So we'll have a bit of a laugh, and me and Tom, who work very closely with in my office, the legal team will say, "I spoke to this big shot in America, blah, blah, blah," and it might be an associate. And I'll say to Tom, every day you'll speak to at least one or two CEOs of a firm. So, the opportunity you'll get within specialist finance is you put yourself in small founder-run businesses where you can learn. You can sit next to people and be a sponge. Often I worked in a bank. I didn't know anybody above my direct manager when I worked at the bank, because there was just thousands of people there. So I think if you want to join a business, you want to be a sponge, you want to learn, you want opportunities to progress. These businesses are entrepreneurial, they're fast-paced, they're fun. You'll be challenged, but you can progress. If you look at Avamore as an example, Harry, Ed, Adam, every leader in-house has almost been promoted from within, which is not too dissimilar to recruitment. You can forge opportunities for yourself if you've got skill and ambition and want to learn and are hungry. So yeah, I think it's a great sector. Similar to Stu earlier, when people ask me what do you do, I say I recruit, but I work in real estate finance, because that's what we do. It's a sector. We're not recruiters who just recruit anything. So hugely passionate about the sector. And if there are any people that want to get into it, I would highly recommend it.
Yeah, so if we're talking about getting into specialist finance itself, I think it's all about finding the right environment for you now. And I think there's so much option in terms of the shapes and sizes of business. We've kind of got a small market now, a middle market and a large market. So I think finding the right environment and knowing what you want from that. There is such thing as an unambitious person that's happy to sit on a desk, but most aren't, right? Most want to move up through the ranks, most want to be promoted, want to be head of credit, want to be whatever it is. So just make sure you're going to a business that can facilitate what you want to do long term, because, frankly, if you can get into a firm, stay for a long time and have an impact, that is going to be better for your career than bouncing around and us having to explain why you've had so many career moves on your CV despite you being a fantastic person. So, hey, help us out, right?
Yeah, I think I've definitely seen a few of those CVs.
Yeah.
well, listen, guys, thank you so much for coming in, especially because you both had to travel down from the north, so we've managed to herd the cats and make sure that you're both in London at the same time, and got other meetings as well to take advantage of the travel. So thanks very much for both coming in. We'll put contact details in your bios in the show notes, so people can get hold of you. But for those of you who want to get in touch with me, you can find me on the internet at property_funder. Thanks as always to Avamore Capital for their continued support and sponsorship of the show, and thanks to Davina, our lovely producer, and we will talk to you again on the next one. Thanks and bye bye.